The results are in. Tesla and Netflix have both started tech season earnings, and it looks like it could be a buy the rumor, sell the fact market. Both were down after hours. Hello, ladies and gentlemen, and welcome back to the Daily Show. We discuss markets around the world. As we're mentioning, it's earnings season kickoff, and while the banks have done okay, it isn't really about the banks. It's more about technology stocks. When we take a look at Tesla and the huge volumes going through several different markets over the last 24 hours, I think it'll become clear there's something fishy going on. And on top of all of this, have you ever seen so many gap fills? We'll be discussing whether these eventually fill, and of course we get mean reversion this earnings season. The weakest 2 to 3 months are upon us, and we know that things turn at this point in pre-election years. Let's take a look together at whether it's going to happen this time. Well, welcome back everybody to the Daily Show, where we discuss markets around the world. We're covering the macro, lead indicators, and of course the hottest charts. But what happened over the last 24 hours was pretty interesting. Defensives started to go up, and at the same time semiconductors had some big sells on them. Let's talk about volume straight away. Large size VIX call orders. Yes, we started to see some large smatterings of VIX calls coming back through, and it looks like someone is trying to hedge as we approach 4,600 on the S&P 500. This is a pretty big level, and everybody is focused on it. It could be the last bear stand before we see all-time highs. Let's now talk about volumes. 300 as a strike. Tesla got into the 298s, possibly even a little bit higher before earnings. After earnings, trading in the 270s. So realistically, what happened? Well, one of the largest trades we saw in Tesla over the last couple of months, and in fact years, was placed around 300. We know how important that strike was, and it looks like at this stage it could be a buy the rumor and sell the fact. We'll look at the technicals later on today's video, but let's go through some other large volumes. We saw a sweep coming through, dark pool, semiconductors. This is a big level. Huge new all-time highs for semiconductors, and then suddenly a giant position comes in. Was it a buy or a sell? I think you can probably put 2 and 2 together. It could have been a sell at those highs coming into earnings. We also see treasuries posting a massive trade intraday today, which was a pretty big deal. And then on top of that, we've also got something that we discussed in the previous video, which was both SQQQ and TQQQ getting huge trades on them just before the earnings results. And it doesn't even stop there. We've also got huge potential distribution through stocks such as Google, and a ton of unusual trading activity that's gone on through those stocks in the last couple of days. We've also seen it with AMD, and many people consider AMD as maybe one of the canaries in the markets to show weakness before the market actually does go weak. So is this true? Well, it really comes down to further earnings, and that's why next week is the most important now. It's going to have so many big stocks in it. We've got, of course, all of the big tech stocks, a huge percentage of the market capitalization of both the S&P 500 and the NASDAQ will be reporting. Do remember to follow us here on the channel and subscribe, because we will be covering also expected volume movements. So that's based on the options and what the options markets are telling us. As you can see here, this is the week that really matters, but both of these are going to be so important. We've got huge July, 48% of the equity cap of the S&P 500 reports in the week of July 28th. Now let's go through and think about what problems do we have in the markets and what good things do we have in the markets. First one, a huge problem, is ERP. Now Morgan Stanley's Mike Wilson has discussed this several times, and what he said is that basically it's so good to be in cash and bonds at the moment, then why would you want to be in the markets? It's basically what we call equity risk premium. This is a discussion point, however, it has been many times disconnected before. We had a look a little while ago on the channel back in the 1990s, and we saw a huge disparity between those numbers. So while it's a great theory, we haven't seen it play out yet in these markets, so we have to wait for that type of thing. We also have the BofA Global Investment Strategy numbers coming out, and they're showing us something that's very interesting. In fact, most of these big banks are starting to say that was probably the lowest CPI print we're going to see this year, and potentially we're going to see actually a pickup in CPI moving forward. That is, that inflation is finally going to see what always has happened in the past, which is one big kind of hiccup on its way down to the inflation target. Do you agree with this statement? Let us know in the comments down below. That's a big change there. We've also been sharing some stuff over on our Twitter, so make sure to follow at FX Evolution. And I've updated this chart for all of us, and of course I've put where we are, which is right here. Now the percentages might be different, but the trend certainly is very similar. This is pre-election years taken all the way back from 1999. And what we saw was we saw a pullback during that Fed March period, check. We saw sideways action during April and May, check. This is the S&P 500. And then of course we even saw a pull down after the OPEX week of June, check. We've since run, we usually run, now comes the time. Are we going to follow the exact same trend that we've followed in many of these pre-election years? Well, it's about time to find out, and I think technology stocks are clearly the catalyst if this is going to happen. What other problems are underneath the hood? A lot of people are discussing auto loan delinquency rates increasing. Here we have 30-day past due. Look at this, it's starting to increase. That will therefore probably feed into these, and we'll keep you updated on these numbers as they come through. I'm also seeing collectibles markets starting to crash. We recorded the Rolex, or let's call it watch collection, kind of premium watches. They're starting to drop across the board. They're almost back down to October lows of last year when we saw, the markets actually tip off. And we've also got things like comics, cards, all of these markets are starting to soften through the general broad community. That could be showing us that the American consumer is also starting to weaken, and they're pulling back on what everybody has been spending on, which has generally been kind of frivolous activities. NASDAQ first half greater than the second half, usually yes. If we get a 20% up, which area is going to be bad? The next 2 to 3 months, the Q3 period. So of course, this is an interesting data point, and this stuff points towards, we just need to be cautious here in the markets and wait for, of course, the potential moves to come through. Let's talk about options, unusual activity. I'm sure people that are in Carvana would be pretty happy. Look at this thing, 40% up on the day. That is a massive move. We're still seeing a lot of pickups in hyper stocks. We've talked about those at great length. Of course, Zoom and PayPal have been some of the ones we've been following for a while, and they've been doing pretty well. Unusual options activity, check, that's definitely happened. But let's scroll down and have a look at whether we're still getting a ton of calls. That is absolutely the fact. 62% calls, 38% puts on higher than normal volumes. I expect this to be a very high volume period as we go through, I think arguably, well not even arguably, the most important earnings period of this year. This is going to be make or break for the bears, and really the bulls just want to powerhouse through this zone. Get past 4,600, push those new all-time highs. What has been doing well over the last 5 days and the last day? This is the first day in a while we've actually seen defensives do well. Both staples and utilities and healthcare were some of the best sectors. Do we see that hold up for 2 to 3 more days? This is something we haven't had the whole entire bull run. We've never seen Wall Street move defensive. They just haven't been able to do it. They haven't even chosen to do it. And of course, that's why we've had that excessive run that keeps moving through. Anything else that goes on here over the last 5 days? It's all been about regional banks. The earnings reports were pretty good for the banks. It looks like systemic issues are not there. Why? Well, we know the Fed's been supporting it, but of course, regional banking, 9.12%. You can't say that's bad. It's been pretty good. Technology, semiconductors doing well, but giving up some gains over the last 24 hours. Will that continue? According to the futures, it may do so. So just before we jump into the charts and we take a look at all of the key levels that you need to be watching right now, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, Tiger Brokers have introduced a really cool new feature, and of course, a lot of you out there may like it. It has got to do with trade flow. And many people have been discussing the idea of following options and seeing large positions, and then understanding that these large positions potentially could amount to a bit of an edge in a trade, especially if you see technical analysis reasons at the same time. So what are we seeing here? At the moment, we've got some big, large positions being opened over the last couple of days from companies such as Amazon to Apple to Nvidia. And the best thing, it actually tags them as whether they're potentially bearish or bullish style positions. This is pretty special, and of course it's great to be able to see options flow within the platform. On top of that, if you're coming into earnings season, you're going to need news and you're going to need earnings reports in general. Well, don't worry, Tiger Brokers has you covered. You can select your watch list, positions that are opened, dividends, IPOs, report announcements, and of course select daily, weekly, monthly. They also have some premium news feeds such as Reuters that you can check out. So what are you waiting for? Check out the special offers down below and see whether Tiger Brokers is available in your country. All right, let's jump into the charts. This is the most important chart moving forward for investors and swing traders. US 2-year, we're looking for whether we get a new high, therefore, of course, an acceleration of yields. Markets hate that. Or whether we just continue to see this weakness. This will also make and break a couple of other trades we'll talk about in today's video. Make sure you set your alerts above and below around 4.3. These are going to be critical zones to watch. Magma, this is our kind of barometer of whether we're seeing big tech pull back. We're almost at new all-time highs and we have what we call a TD9. This is an exhaustion technique and we've seen a little bit of a pullback now in the last 24 hours. Still just a long leg doji. Nothing much to mark from it, but you can see here on the daily a TD13, even more exhaustion. Will it finally mean revert? And what we mean by mean reversion is just come back down to the 20 moving average, which is catching it pretty quickly. Yep, it's around percentage-wise, if we take that, around 14% down from where it currently is. Eventually, markets generally will mean revert. The only problem is if it starts to just go sideways and the 20 catches it, that's not very exciting. So at this stage, we haven't got a turn, but we do have a long leg doji. What about the skew? Got crushed again. That's a good sign for bears. That's exactly what you want to see in terms of these markets. And if we go through RSP, you'll notice that it wasn't the entire market finding weakness. Equal weight was actually doing quite well. It was technology that actually started to short. And really, this is the one that if you're a bear, you want it to short. Technology, technology, technology. You know, semis are just so important to this market as well. If they start to fall, huge percentages of the S&P fall, not necessarily RSP. And I've heard that quite a few fund managers are now starting to request equal weighted indices. So basically they're looking for exchange traded funds equal weighted. When we move over to copper, what's going on in copper? Well, it's been falling off the last couple of days. No notable move over the last 24 hours, but we're watching that for demand destruction. The VIX didn't really do anything, jumped up a little bit. We saw a lot of VIX calls being open though, more importantly, and SQQQ will do better, you would think, if the markets hold down, such as the futures are saying. So we saw a monster trade coming through here in the last about 48 hours ago. It was precursoring these earnings and they're going to be profitable as of, pretty much the next 12 hours. So when the market opens again, it looks like these guys may have had the jump on a few things. And I'm guessing it's because we're seeing insider sells at a higher rate from some of these tech companies. We'll report on that in our video tomorrow. Make sure to subscribe. There's going to be some big stuff there. Let's talk about Qs and central bank liquidity. They're disconnected. Central bank liquidity started to head down, although we have since found out there's obviously all of these dark kind of liquidities in the background that the Fed's been creating. This is still an important chart. We haven't had it disconnected like this for multiple years, so we're looking for that. Treasuries found huge buys over the last 24 hours, or at least huge trades. Will we get past 104 and begin a new upward trend for treasuries? If you are a bull on treasuries, you're betting that the US 2-year and 10-year and everything is going to start coming down. If that doesn't happen and they start accelerating off, we could see new lows for treasuries, but I do think anywhere in here is pretty solid, and I think there's going to be, a very nice accumulation around these areas. Treasuries starting to look really good again for the investor and for the trader. Dollar index did rally a little bit. We expect this to be a pretty heavy zone of buyers. The reason why is because we took that low, which we discussed in the last video. We've taken this high now. We've come up to this first base, so that's a drop, base, drop. We've found some supply. I expect dollar to fall back and then possibly find buyers now. There's been some switch on the small time frames, and I think scalpers and day traders will be paying attention to that. When we move over to gold, you can see where we are. Supply, supply, supply. Key resistance, will we get through? We don't know yet. We also are looking for gold to continuously find buyers on pullbacks moving forward, and we will report to everybody on the weekend whether huge traders have come back. I have a suspicion there's a huge trader that bought gold about a week ago, and I think it's going to show up when we look at their filings moving forward. Semiconductors, we know there's a huge trade here. We know it's an all-time high, and we know that there's a potential here for an island reversal. Take a look. We have now 1, 2, 3, 4, and 5 days here. maybe we sell off, hold that zone, and then gap below off an earnings next week. All of a sudden, we've got semiconductors telling us that the bears are in control. We haven't had that since over here, and that led to